The views expressed in this video presentation are my opinions and not necessarily the opinions of guests and others sharing or reposting this video. The content is produced only for educational and informational purposes. Do not regard any statements in this video as a recommendation to buy or sell any financial instrument. Investing comes with risk to loss of principal. Always conduct your own research and seek guidance from a professional investment advisor. I am not a professional investment advisor. I'm Dollar Will. Let's not lose so much money, Pretty down. Let's see. Let me move this. Pretty down. Pretty ugly out there. All right, as you guys know, I don't post every day. Because nothing's really changed. I don't want to keep coming on saying it's the same. But here's the Dow, or let's see the close up on the now. This is the Dow Jones Industrial Average. We're looking at a 1 hour chart. This is the resistance. This leg of the decline from 2 p.m. on the 4th. So all of this, the optimism you've been hearing about, people telling you buy now. If they're not technical traders, they don't know what they're talking about. You should not buy now. Wow, I wish I had that. I had a tape of CNBC. I put it up on my Patreon. I wanted to play it for you guys, and I forgot all about it. I don't feel like digging it out. But the announcer, they're known for going pretty deep on the fundamentals on CNBC, and they went to I think it was Bob Pisani, and he said right off the rip, he said this is all in the hands of the technicals right now. He said, to the effect of fundamentals don't even matter at this point. That's the most truthful statement. That's the most truthful statement. So you need to listen to, how you need to have a roster of technical traders who you trust. And I say a roster because we all don't practice the exact same strategies and methods. The quote unquote naked traders. This is a tough one for the naked traders and the ones that don't use oscillators or anything like that. After this, I bet they'll start using some oscillators. They'll understand what that stuff is for. Okay, traders who don't look at longer range charts. I am a practitioner of Elliott wave theory. There's a concept called a Grand SuperCycle. One of the tenets of Elliott wave theory is that not just that prices move 5 ways up or 3 ways down. That's true, but the bigger, more important thing is that prices move in these cycles at all time frames. So even if you want to go out 200 years, you'll see these cycles. And we're in, or at least those of us who are Elliott wave practitioners, those of us that care to look or try to figure out what cycle are we in, looking at, say, about 150 years span of time. If they care to even look, they would come to the conclusion that this downturn is keeping right with the projection. And it was a little, we went a little higher than we should have gone. This thing was overdue. So basically, there's in my view, a wave one that started around the Civil War, emancipation, okay? And what we call the Great Depression, in Elliott wave terms, I call that a wave two. Wave two was pretty rough. The next worst thing after wave two is wave four, okay? Wave three is the recovery after the, quote, Great Depression and the peak that we just experienced. So all of that was wave two. So we're talking about the life cycle, or the time period that contains your life, your father's life, and if you're young enough, your grandfather's life. Okay. And wave three is it's not the shortest wave, but it's often the longest and most prosperous wave. So a lot of what we have interpreted as reality, or the quote unquote normal, that was us living in that prosperity cycle of wave three. America became, a boss power in the world during wave three. I break this down a little further in the first video in this channel. You have to go, again, look at the very first video I posted back in, I think it was January 2018, January or February. I was a little off. In the video, I think I projected that the high technically would be later, but the price action, the way that we were rolling over in January of 2018, I thought that was it. But the price projection for Elliott wave theory did not say that was it. It projected that we would go a little higher, but the steepness of that decline made me think, okay, maybe it's just early, maybe, but hey, as it turns out, the projection was I should have, stuck with the rules of the game, but we've fallen so far now that little error means nothing, so a lot of people I know, I called personally and asked them to, told them that they might want to consider getting out the market. Go talk to them. Go talk to. I suggested that they go speak with their financial advisors, and a number of them got out of the market way back then in 2018, January. So that little bit of run up above that high is just pennies on the floor now. They may have wished to participate in that additional run higher, but I bet they're not missing that money now. That little bit of money that they lost out on riding it out. They're not missing it now. Also, the small cap index, the Russell 2000, that index had a peak in 2018. It never went higher. It never went higher. But what has me concerned about, okay, so I got this covered. There's no reason to be optimistic about a cheerleading, a recovery, at least until this daggone resistance trend line is broken, Let me see something. All right. I had to check that because, I have a tendency to talk and my mic is muted. I didn't do that today. Let's see. I want to go out and get cut to the quick. This is kind of what got me. All right. This is a global correction. Or, see, I don't say words like crash, okay? Because at some scale, like if you're looking on quarterly or yearly charts, you know, this would be a yearly chart, you know. At some scale, structurally, this is quite orderly. Okay, it feels disruptive to us, but on a bigger like 100-year, 150-year span of time, this correction is nothing unusual. Okay, the determined way that people are selling, that lets you know they know something too. Okay, they're not thinking on day to day. Okay, they're looking at some longer range stuff. Okay, because we have an oversupply of just about everything except toilet paper when you go to the store right now. That's just mania that we created, you know. But we have an oversupply of everything. And so what concerns me is this overbought state. Okay. It has to get down here to oversold. And this is a quarterly chart. We're a long way from it. Okay. We're talking about something this epic. It has to be one of those structural uh, declines, like what I'm calling this a wave 4. So we absolutely will get to the sold state, meaning momentum coming down in this area, and we're like forever away. Okay, so what I think, again, this is just my opinion. What I think is we're coming down here to the area of this high and this low. Somewhere in here, we're going to fall to here. And then we're going to have a vicious rally, huge rally. And then we're going to finish it off. And we're going to take out this low in 2009. Exactly how low, I'll have a better idea, a better opinion, a sharper opinion. This is all fuzzy math right now when this bottom comes in. Okay. Because in Elliott wave theory, prices fall in the ABC pattern. So this is still the A wave. And the reason why what makes me think it's still the A wave is the narrowness of this decline. Let me go back to it daily. Narrowness of this decline. I mean, we're nowhere near the 50-day moving averages like forever ago. Let me see what that looks like. Usually you would see price kind of hug, like on an uptrend, price kind of hugs the 50-day moving average. On a downtrend, kind of see the same thing. We're not there yet. We're nowhere near it, and we're due to come back towards this 50. But there's no reason to get to anticipate that until we cross this line. And the intensity of the way that we're selling these oscillators, like on the daily, it's like the oscillator is broken. It's like on everything. Uh, this just the selling pressure, the selling momentum is just too great. But when you go down to 15 minutes, things kind of look like they should, because this is so very intense. So there's no reason or no real technical sign that we're going to cross that low. No, nothing outside of hopeism is making people think that this thing is going to rise. This is just falling like a knife. So if we were really ready to come back, we would have had a pullback. And today is quadruple witching, and that's a lot of I don't want to say volatility. I'll say volume, and it might be volatility. Volatility is wild swings. Volume is just a lot of shares changing hands, a lot of activity in the options market with there are lots of expirations today in the futures market for the major indexes and larger companies, and in the options market in the major indexes, S&P and the Dow, and some larger individual companies. So it's a lot of activity going on over there. And some people have taken out options, let's say put options. They guessed right in this decline, and that contract gives them the right to buy shares at a price way up here on the short side. So it could be interesting. I mean, we could get a fake bounce. As some people might decide that they want to exercise that option and they want to buy those shares or shorting the market at these higher prices, and they can just hold the stock. But in order to take that, in order to exercise that option, they have to buy the shares. So they have to spend the money and buy the shares, and that might cause a pop. Be interesting. But like I said, it'll be fake. Let's see. I want to show this. The options market. I'm not going to look at today's expiration because what I'm going to show you is how money is betting in the options market. Are they optimistic about the near future or not? So let's look at the next contract for the Dow. Is this is monthly. It's not another one until April 17th. Okay, it's looking good today. Anything below, I would say 0.8, 0.8 is positive. Nothing ominous. So this is the put call ratio, basically the number of bets against the market compared to bets for it. Best number of wages, if you want to look at it that way, that the market will fall relative to money invested, taking the position that will rise. So this is optimistic as long as when this number is higher, but that's just for today. And this is just what's moving around right now. Over here, we have what's been on the books. So this is like what's fluid intraday. This is kind of what's on the books. This is contracts with future expiration dates, like expiring next week. And this particular week, we're looking at the April 17th. Okay, so for all of the contracts in the future, so people have on balance, the put volume is it's just about even 1-to-1 or slightly ahead of the call, but anything above 0.8 goes to the bears. So you got to get this balance put call ratio to be less than 0.8. That would show money being wagered, if you want to look at it that way, that we rise, and decisively so. Not 1.0. It's supposed to be 0.8 or less. So we're already in the no voter confidence area, and this is for a contract that expires April 17th. So combine that with the trend line that has not broken, that I showed you, and got a scary situation. Now, what really caught my attention, what causes me concern, is the safe places. Theoretically, theoretical safe places don't look so safe. Okay, Procter and Gamble. Let's look at them. Procter and Gamble is the largest company by market cap in the consumer staples space. Okay, I'll show you some of these names. You're not going to really know what they do until you read the profile, but I'm not going to read them, but I'll show you the names so you'll know it when you see them, because these are the ones that people will talk about. They have all the boring stuff in the center aisles of the store. What's up with my daggone? Oh, come on. Don't do this. It would freeze on me. Oh, the death spiral. I don't think this has ever happened. And I can get this thing to, okay. Just by market cap. Market cap is a measure of how much money is invested in the company. So basically, if you converted all the stocks that everybody owns of a particular company, you sold it all right now, and you converted it to cash, this is what it would be worth. So more Procter and Gamble has attracted more money by a sizable amount than its second place company, Unilever. Church and Dwight. I think that's the Arm and Hammer baking soda folk. I think that's what that is. Now, Procter and Gamble, listen to what they're in. Okay, now what usually happens in the market when the tech stocks, the growth sector, those are called growth stocks, when they sell too high, and when the economy starts to slow down, money rotates to the safer sector, and that's supposed to be the staples. And listen to so it goes into these safer, boring things, and listen to this. Procter and Gamble is engaged in the manufacture and sale of a range of branded consumer packaged goods. The company operates in 5 segments: beauty. People want to look good even when they don't feel good. Okay, psychological, grooming, healthcare, fabric care, and home care. We can't buy a home, so during downturns, people they fix up what they have and they spend more time at home. They have staycations, not vacations. So they do little things to make the house, a little more comfortable. And baby care and family care. Also, we likely to get a baby spike, a baby making spike, as she becomes your PlayStation and you become her joystick. The beauty segment provides antiperspirants. Yes, use the antiperspirants and deodorants. Cosmetics, hair care products, personal cleansing, prestige products, and skincare products. The grooming segment offers blades and razors, electronic hair removal devices, hair care appliances. The healthcare segment provides feminine care, gastrointestinal, incontinence. I guess is that diapers. Okay. Rapid diagnostics, respiratory, oral care, and other personal health care products. The fabric care and home care segment offers bleach and laundry additives, air care products, batteries, dish care items, fabric enhancers, laundry detergents, pet care products, and surface care wipes. The baby care and family care segment provides baby wipes, diapers, and pants, tissues, and toilet papers. Procter and Gamble is based in Cincinnati, Ohio. Okay, so these are the things that you would invest in. So you don't need nobody to tell you that. Now, Procter and Gamble sells all of it. You can look at these individually and find individual companies that do it. But Procter and Gamble is the number one in this space by market cap because they got their finger in a whole lot of pies. All right. So people are looking for the safe place to go in this crisis. And we'll look at the charts. Okay, that's the daily. You can understand it better. Looking on the longer. All right. This is a monthly chart. This doesn't look safe. Okay. This is a lot of selling, and we're way overbought. It too needs to come down. So that's what's scary. Is that the place that's safe. I can put an imaginary line here, and you can see we broke the trend. Okay. And we got a long ways to go. So none of the safe spaces look safe. Okay. One of these, it's another one I'm getting ready to talk about, Walmart. One of them didn't look good in the options. One looked okay, one didn't. Let's see if I can remember, see which one. I don't want to deal with today's expiration because it shouldn't look good if the contract has no life on it after the day. So let's get a reading on how people feel about the next coming week. Okay. Based on how they are betting on Procter and Gamble. Are they buying on the dips? Do they see that decline as a opportunity to buy? Or do they think that it's a sign of more worse to come? I don't know. Let's see. So that's good. Today this actually might be yesterday. I don't know if they updated this to today's stuff. It's below 0.8. That's positive. And this is below. It's not quite at 8. So that's pretty good. But it got to catch this thing. It's got to catch the price. But this thing is way overbought. So I think, my opinion, is this thing is going to fall until we get overboard. We're going to come at a minimum down a little closer to here. But let me go look at it weekly. Let me look at it. Okay, that is weekly. Oh no, we coming down. We coming down. we getting into it. There's no place to hide. Well, there's two places: the risky bear ETFs, and the other place that'll be in another video coming real soon. Okay, it's boring too, you know. People trying to buy the tech stuff on forget about everything you loved when the market was coming up, all that uh, 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 Apple and Netflix and the semiconductors. Forget about it. Forget about it. We're in a different stage of the economic cycle. It does not favor growth in those areas. So forget everything that worked. Okay, it's a whole new thing happening right now. And when you see large money moving in these large blocks like it's doing right now, that's what it's trying to tell you. That, but this is where we want to go. Okay, but it ain't ready yet. So that's why the market is falling in these big 5, 6, 7, 8%, 2,000 points. It's because the safe sectors, air quotes, the safe sectors aren't even safe. Okay. Let's look at Walmart. Walmart, this is a monthly. It made a high, which is good. This is called a like outside move. So it made a low, then it made a high, which is good. Ordinarily, you see, had all of this decline, made a low, took out this low, this last fractal, made a low, then went and made a higher high 2 days ago, Wednesday. That's good. Let's see if this is really optimism or if it's a fake move. Let's go to next week's option. We don't want to look at today's because it's expiring. It should be negative. But we're going to see how people feel about, feel. Emotions is part of it. See what because there ain't no whole lot of thinking going on, especially when I hear people saying that you should be buying on the dips. So there's a whole lot of feelings, a whole lot of thinking. Okay. Okay, so it's feeling good about it today. Okay, so they're feeling optimistic. But this side over here on the right, so this is like intraday, think of it that way. This is what's on the books for contracts in the future that haven't expired. Are those contracts open contracts? Are they bullish positions, meaning expressing sentiment that the market is going higher, or in this case, I'm sorry, not the market, but Walmart is going higher, or is this bearish sentiment? The position, the opinion that Walmart's going to go down. Well, the ratio is above that 0.8. It's above the 1.0. This many puts, this many bets against Walmart, against this many bets for Walmart. This is, we're living in the grocery store. Okay, we cleaning, we selling we buying everything they selling, but the price is too high, and the options market knows it. And so what happens is when people are shorting the market, the short position begins with a purchase of the stock that you're betting will go down. You say to your broker, I want to short Walmart. And so you give the money, you put up the money, your broker goes out into the market and buys Walmart. You're borrowing those shares. So A short position begins with a purchase of the stock, which can cause the price to pop. So someone that doesn't know will think that that higher high was an expression of optimism. But you look in the options market and you see, nope, those are shorts. That's a sucker play. So that's kind of where we are. This is not the time to be trading technicals if you've never had any training, don't know what you're doing. It's not the decent. Now, again, everything I'm saying is just my opinion. I'm just some dude on YouTube. Okay. But I think people need to sit their ass down. I think that people need to get familiar with the people who have no background in trading, who didn't care enough about it to try to learn it. I think what people should do is sit their ass down. I think that they should get familiar with the old phrase, cash is king, and value protecting what you got as opposed to putting it on the table. I think people should really think hard about getting in cash and then starting to learn. Let the market go crazy, then you start learning. Because at the end of all this, oh my God, it's going to be so much. If you can just protect a little, just save your money, save what you got. The big lottery hit, the lottery play is going to be when this is over. And this is going to be over sooner. And there's a middle B wave that's worth catching. But trying to anticipate it, no. You can get the cash right now and you can start learning some basic stuff, maybe across the next month, that might allow you to participate in that rally. Stop listening to these fundamental people right now, fundamental analysts, and listen to some technical traders. Go find you a financial advisor, and you want to know, do they include technical analysis in their decisions or their opinions? If they say no, run. Okay. All financial planners, they're going to use fundamental analysis, but the good ones, they add technical analysis to it as well. If they don't show any high regard for technical analysis, run. Let me see who we got. What's up, Rain Woman? What's happening? Let me see. Wow, I got a low turnout. I think everybody's asleep. I don't think this is like I've never done a show with just 3 people. What's up, Jerron? Venable. I've never had so few people, but I'm grateful for the people that are here. So yeah, learn some basic technicals. I would love to have you folks on my Patreon, but join somebody's Patreon if not mine, or get a book if you don't want to pay, but you really do need somebody to guide you through a little bit, or have somebody you can just ask a question to here and there. Or you see people on videos saying conflicting things. You need somebody you can have an extended conversation with. because I'll tell you, I'll say some outlandish stuff, that people think is outlandish for them, but it's on me to then go and provide the data to back it up. The two myths out there that I'm not going to say battling, because it's just, you can't win the argument when people get, when they dig in. The first myth is a house is safe. You should always buy. No, you should. There's a time to sell. Okay. There's a time to sell, but for the past 2 years, I couldn't sell that to people. They thought it was always, owning a house was always a good thing. I was telling them, you might want to talk to if your parents don't have any dependents really. You might want to float the idea of them getting a reverse mortgage and sucking that equity out of the house while they still living in it. So as much of it as they can, because that value, that appreciation isn't real until you sell it. A house is like a stock in that sense. The value might go up, but that's just a paper gain. So in order to lock in that gain, you got to sell that house, or you got to get a what you call it, a line of credit, home equity loan, or you do a reverse mortgage. I had my father do that. He doesn't have any dependents, and so him and his wife is set up so that when he passes, she will get to stay in the house for the remainder of her life, and neither of them have to pay the loan back. So we, I guess, we would inherit the house, and so we would inherit that debt also, and so we would have to make a choice at that time. Do we want to? Is it cheaper is the house worth I guess the expense of paying off the loan? So if the equity in the house is worth it, then hey, you put a new mortgage on it, and you just pay that part off. It might be worth it. Or you sell the house, and you if there's money, if there's a profit there, you can sell it and walk away that way. Or you can do nothing. Let's say the market like really, really crashes and real estate's in the toilet, and the house was worth, $400,000, and then it's worth 200 or 150, and you wouldn't pay that loan back. You just walk and let the bank have it. So now that's how you stick it to the bank. And I'm not talking about anything illegal and unethical. That's the way the reverse mortgages work. The heirs get to decide if they want to pay the loan back, and then they would take possession of the house again. Or if it's not advantageous to pay the loan back because the value of the house is so low because the market tanked, then you let the bank have it, or it's over. So and so we were all cool with that. My siblings, we were all cool with that. We wanted our father to be comfortable, financially comfortable in his retirement years. So. But that's the kind of stuff I was talking about for the last 2 years. But everybody was on this whole thing of, sell for it. You never sell, and saying things like, the market always comes back, and that's like what I was saying at the top of this show about that Grand SuperCycle. If you and your parents, all of us are living in the time period since the recovery of the Great Depression, and that's a Elliott Wave 3. So, we kind of have a skewed perception of reality, we think that that's a normal, that's perpetual. No, that's just a phase within a cycle that we went through. And this downturn is another phase in that cycle. So, everything is to be, especially in capitalism, everything material. There's a time to sell everything material. You're not supposed to love nothing material. No stock. You don't fall in love with no stock. You don't fall in love with no house, no car, nothing material, So you have to play it all, pimp it, all material. You put your value in people, and safety, things like that. But that's it. I'm going to shut this down. I don't want to get too preachy. I'll do that sometime. If anybody want to hop on, you want to chop it up. The link is at the top. I give you let's see, if you intend to hop on, type in the chat that you intend to hop on, and then I'll wait. If I don't see anybody type in the chat, then that means nobody wants to hop on, and then I'll just sign off, and I will start preparing my next video about something more specific about the US dollar, and maybe one good place to put money. One good place. Not many. Outside of the bear ETFs. So I got no takers, so I'm going to sign out. Peace, everybody.